What's up, guys? Welcome back to another huge earnings week. We just got Symbotic's results for Q2. I wanted to give a quick overview, and then once the official call comes out later, I'll definitely get a video out on all of that, either later tonight or tomorrow. But really quick, just wanted to go over. We got the results for Q2 fiscal 2024. I have my little spreadsheet over here to compare. I've been tracking this company pretty much since it went public. It's been almost a year or two now. Wow. But anyway, Symbotic, a leader in the AI-enabled robotics technology, blah, 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 announced their results. They posted revenue of $424 million. Wow, that's way above. They had guided for 400 to 420, so they beat their guidance. And year over year, I mean, you're looking at very high growth rate. What is that? 266 to 420. So you're looking at something like 87% growth here. That's really good. Net loss, $41 million. So their net loss last year was 55 million for the same quarter. So their net loss is narrowing, going in the right direction here. Adjusted EBITDA of 22 million. In the same quarter of 2023, Symbotic had revenue of 267 million, net loss of 55 million, adjusted EBITDA loss of 11 million. Cash equivalents increased by 276 million from the prior quarter. Wow, they now have 951 million dollars of cash on the balance sheet at the end of the second quarter. That's a nearly more than double from last year. They had 464 million of cash. CEO here stated, this past quarter, we executed well for our customers, made significant progress on our innovation roadmap, and delivered solid financial results, said Rick Cohen. CEO, we made significant advances in both software and hardware this quarter that will benefit customers, accelerate deployment times, and increase our deployment capacity. These advancements helped us to accelerate deployment progress during the quarter. So that's a great sign to see because, the faster they can get these things built out, their margins are going to go up. They're going to be able to do more. It should really help with the growth and their margins because they'll be able to take on more customers. We started 3 system deployments and completed 3 operational systems while achieving faster revenue growth, higher margins, and stronger cash generation than planned for the quarter. And the stock here is going to the moon already. Symbotic stock is up almost 9% as of right now, before the official earnings call has even happened. So you're looking at it's around $45 after hours here. Looks like it was even higher briefly. So we'll see what they say on the call. Yeah, it was up to 48. Depending on what they say, might go even higher, might come back down. We'll see. Outlook for the third quarter of 2024, expecting revenue of 450 to 470 million, adjusted EBITDA of 27 million to 29 million. So we'll get their full report at 5 p.m. today. And I will definitely, be on the lookout. I'll be breaking that down. I'll give you guys a full video, in-depth analysis, either later tonight or tomorrow at the latest. But if we just look at by the breakdown here, you had systems revenue, massive growth, software maintenance and support. That went up quite a bit too, which that's great to see, up to 2.5 billion or 2.5 million, I guess, from 1.4 a year ago. And pretty good growth quarter over quarter too, 20%. So this is great to see. Wow, operation services doubled. So this is looking fantastic at a quick, initial glance here. The growth is intact. I was worried that, their growth was going to really start to decelerate, but it's looking like that's not the case. They might have a lot of tailwinds working in their favor, while inflation and all this stuff is a massive headwind for so many other companies. It may actually play into Symbotic's hands because they're helping companies save money, right? You're buying these systems, it's saving so much money. You're talking about tens of millions, hundreds of millions of dollars over the system's useful life. And it's great to see, the revenue from software really huge increase year over year. Long term, this is where the money is. This is the cash cow because this is going to be a high margin business. Software SaaS level margins, whereas the system revenue is not going to be high margin. Obviously, right now, that's the bulk of the revenue, but it's great to see this number really growing and expenses staying pretty flat too. For systems, it went up quite a bit, but that's okay. Again, that's not where the margins are. Software maintenance expenses went down. So that's great to see. That went down like 10%. That's really amazing. Operation services expenses went up. So we'll see what happened there. But again, operation services, systems, cost of revenue staying flat, and software maintenance is looking great. I think that's, the exciting part of the business long term. Gross profit going up, let's see, they put 46 million into R&D, so a little bit less than last year. They've definitely been getting smarter with their cash use and just and their loss per share also trending in the right direction. They lost negative 7 cents versus 10 cents of loss a year ago. So things are looking really good. Now, the number of shares is going up. This is something that concerns me. It's still going up quite a bit. We're getting quite a lot of dilution. We'll see what they say about that in the call. I think I remember them saying that it should kind of level out maybe second half of this year. So, not quite as bad of an acceleration. Last quarter we were up to 83 million. A year ago it was at 60 million. Now we're up to 93. So 10 million more shares outstanding quarter over quarter. So that's not great. Investors getting shafted there, but we'll see what they say about it. So there's one other thing I want to touch on. Someone actually dropped this in our exclusive investment club community Discord here. Some great color on some Symbotic statistics. Their employee headcount, you can see the company has definitely been, optimizing. Things are slowing down in the economy. We know this. 2 years ago, they were growing the employees 33%. 1 year ago, the employee headcount growth was down to 9%. And in the last 6 months, they've only been growing it by 4%. So this should also be part of the reason why margins maybe start to tick up. A couple more things here. The employee distribution. Again, you see, a year ago, they were adding a lot of employees. In IT, it was up 14%. And IT in the last 6 months was only up 7%. 3 months, only up 2%. And, things like quality assurance, their headcount is down 7%, 6 months, 4% in the last 3. The only thing that they're hiring for is engineers, it looks like, and just barely. That's the only one that increased, at least. They're still hiring, but, these numbers are ticking down. 1 year ago, engineer headcount was down 2%. 6 months, it was 0%. In the last 3 months, it's up 1%. So that's what you want to see. They're hiring for, the essential positions now. They're probably, getting ready to weather the storm here like everybody else. And their total job openings as well. This is all down quite a bit. Engineering jobs down 10% in the last 3 months. 6 months ago, it was up 12%. IT 1 year ago was up 29%. The last 3 and 6 months, it's been down 4%. And, the trend seems to be the same here. But they are hiring program and project management, which that's also probably a good sign because they've got a lot more business to do here. That was up 250% a year ago. That's the only one that is actually going up quite a bit, up 600% in the last 6 months and up 17% in the last 3 months. So in total, they are still growing headcount, but just barely. Again, 1 year ago, total headcount going up 44%. 6 months, it's only up 4%. In the last 3 months, up 2%. So again, it seems like they're optimizing, they're growing the company in a smart way, and we'll have to see how this all plays out. We'll see. I'm sure we'll get a lot of color on the earnings call here. Just at a quick glance, see if there's anything else worth mentioning. The gross profit margins were down. Adjusted gross profit margins went slightly up year over year. Again, I'm sure they'll explain all this on the call. Yeah, a lot of shares outstanding. That's not great to see. That number keeps creeping up. But, I think they're being smart. Their cash is increasing. 900 million plus cash on the balance sheet. That's really great to see. They can weather the storm here. They still have that massive backlog of like 20 billion plus. So on this call, I'll be looking to see, what they say about that, how the backlog is coming along. I want to hear updates on Greenbox, what we can expect there, and maybe get even some color on their other innovation projects like BreakPack. That would be awesome to hear. So subscribe, guys. Check out the channel. I will definitely post a video after we get the call results, either tonight or tomorrow. Be on the lookout for that. Like, subscribe. Let me know in the comments below what you think. And again, if you want to join our investment club private community, you can get a link to that. The link to my Substack down below will give you all the info. You can sign up for my Substack newsletter. That's totally free, all my articles, but the community access tier is paid. I'm sharing all my stock and options trades there. I made over $7,000 last month with my options trade. Shared them all in there. We're doing weekly Zoom calls. You get a lot of perks, and you get to hang out in an awesome group chat full of other like-minded investors. So I'll see you guys. Be on the lookout for my post-Symbotic earnings video. See you guys later.